It's my pleasure on behalf of all the folks up here with me from McLeish, Orlando, and Oatley, Vigmond, to welcome you to our third webinar concerning the changes to the new auto insurance scheme here in Ontario. I'm going to ask Jim Vigmond to begin by giving us a short overview of what the experts' report has concluded or suggested to FSCO concerning the definition of catastrophic impairment. Jim?
The recommendations for changes came out on Friday. It's a considered document. By that I mean it's apparent that a great deal of effort and study went in to the proposed changes. There was varying levels of agreement and disagreement or consensus among the participants, and it is difficult to see how all that distills out in the final recommendations. The participants on the panel included a number of research scientists and policy analysts, as well as those that we know, Drs. Amies, Dr. Kaplan, Dr. Lissert, and Dr. Rajni, who of course are practitioners as well. And their influence, as you will hear me explain, is noted in the documents. So I'd start off by saying goodbye GCS and hello GOS extended. The Glasgow Coma Scale reading of 9 or less has been eliminated and not replaced. I would note as well, parenthetically, that there is a real downloading to the hospitals in terms of the definition of catastrophic itself, and that is going to be something that will draw comment and perhaps some criticism down the road.
Just to be clear, Jim, before you go ahead, this is not the law yet, is it?
No. This is the final report of the Catastrophic Impairment Expert Panel to the Superintendent of Insurance. I don't know where it's going to go from here, and I'll leave it to Dale, who will hopefully have a little bit more of the political side of things, but I don't know where it's going to go from here. So gone is the GCS. The overriding principle is set out on page 13 of the report, and we have the report on our website if you care to look at it. It's also on the FSCO website. And I'm not sure if John and Dale, you've posted it yet. It's the panel agrees that a catastrophic impairment is an extremely serious impairment or combination of impairments that is expected to be permanent and which severely impacts an individual's ability to function independently. And it's noted that it's not a medical entity, but it's a legal entity which defines a point along the medical spectrum of impairment severity. So all flows from that. With respect to paraplegia or tetraplegia, the definition has been narrowed, further refined. A person has to have completed or participated in an inpatient spinal cord injury rehabilitation program in a public rehabilitation hospital. There is a reference to the Asia grade. The Asia grade is the American Spinal Injury Association acronym, and a person has to have an Asia grade A, B, or C, which are complete and different levels of incomplete paraplegia as defined, or a permanent Asia grade that is or will be D, provided the insured has a permanent inability to walk independently as defined on score 0 to 3 on the spinal cord independence measure. That is the Lowenstein Hospital Rehabilitation Center spinal cord independence measure. I won't go into further detail because we're not here to fine-tune any of this. But you can see that it is a restriction on paraplegia or quadriplegia. In addition, it requires urological surgical diversion, an implanted device, or intermittent or constant catheterization in order to manage the residual urological impairment. So that's an and/or urological issue. With respect to brain injury, that has changed. We have a new concept of an interim catastrophic impairment designation, which makes a lot of sense to me, and I think that's one of the good things to come out of this. For a traumatic brain injury in an adult, it is a person who qualifies as being catastrophic is someone who is granted an interim catastrophic impairment status when accepted for admission to a program of inpatient neurological rehabilitation at a recognized neurological rehabilitation center, which facilities are to be published in a guideline, or that they have a GOSE, that's a Glasgow Outcome Scale, extended assessment of Jeanette and Bond, vegetative after 3 months, a severe disability upper or lower after 6 months, or a moderate disability lower after 1 year due to documented brain impairment. And there is a corollary to that if the interim status is not going to fly with the government. And that's for adult brain impairment. It's different for pediatrics, which I'll get to in a minute. The whole person impairment of 55% stays. However, all impairments relatable to non-psychiatric symptoms and syndromes, example chronic pain syndromes, fibromyalgia, that arise from the accident are understood to have been incorporated into the weighting of the physical impairment. And with the exception of traumatic brain injury impairments, mental and/or behavioral impairments are excluded from physical impairments. With respect to psychiatric impairments, there has been a complete change. Instead of having marked impairments, we now have the DSM-4-TR criteria: 1, a major depressive disorder; 2, post-traumatic stress disorder; C, a psychotic disorder, or such other disorder as may be published in the guideline. Impairments which are due to pain are generally excluded with exceptions. Any impairment arising from traumatic brain injury must be evaluated under a different section. And finally, a severe impairment is consistent with a global assessment of function, or GAF score, of 40 or less. There is a pediatric traumatic brain injury. There are 2 ways to get in: automatic or early determinative. Automatic, if you have an inpatient admission to a level 1 trauma center with positive findings on CT, MRI scan, or inpatient admission to a publicly funded hospital facility. And then it goes on to use another one called the Kashi scale, but I won't get into the details of that, but it's very specific. Finally, there is no longer combining of any physical and mental and or emotional behavioral impairments. The sort of biopsychosocial model has not been adopted. It requires further study. And at the end of the day, and perhaps Dale will have time to get into it, there are recommendations that further study be undertaken, and one is the combining of the physical and non-physical impairments in order to get to some level of catastrophic impairment. So that takes quite a complicated document into a 5 or 6 minute nutshell, and hopefully that gives you at least some idea of the breadth and extent of the changes.
Well, just to be clear, these are not changes. None of this has taken place. These are recommendations in a report, as I understand it, Jim, in which there is no consensus on most of the major items, but certainly from your review, it's a very complicated document. Now, I also noticed there were no lawyers on the panel, so as one of the people in our office suggested, if this is how we go, there could be a lot of litigation and a lot of clients wondering where they stand. Jim, or Dale, rather, On that note, you're right in the thick of it as the president of Oatley. Can you help everybody by putting this into perspective? What's the significance of this document? Where does it go from here, or do we know that? Just exactly where do we stand on this very, very significant issue?
The short answer is nobody really knows what the government intends to do with this document or with the definition of catastrophic. I mean, this is a medical review of the definition of catastrophic. It was part of the 5-year review that was ultimately deferred during the original phase of the process. So this is simply part of the 5-year review. It's a report to FSCO, which will then be presumably sent on to Minister Duncan with recommendations, and what happens with it from there with an election looming. I, for one, personally doubt that we'll see any dramatic changes in the definition before the election, but you never know. In terms of the report itself, I've had an opportunity to look at it. The stated goal of the report is to improve accuracy, relevance, and clarity of the definition, and the premise that the medical review panel took was they want to equate catastrophic with somebody who has the impairment level of paraplegia, and everybody else with that level of severity of functional impairment should be within the definition of catastrophic, and everybody who does not have that level is excluded. The committee made this decision, and what they've done is significantly narrow the definition of catastrophic impairment by introducing 3 or 4 new criteria and eliminating a couple, but really it's introducing 3 or 4 new criteria for catastrophic. And the goal is, what they say is they want to eliminate false positives. So what they've done is they've added new criteria, they've added new definitions with ambiguous language, in my opinion. If it was adopted in whole or in part, what we would see is an undoing of 16 years of jurisprudence that has interpreted our current definition. And you'll be left with a lot of ambiguity, which everybody, all of the lawyers on the panel know, means a lot of litigation and a lot of uncertainty for our clients. When you look at this issue, the catastrophic issue, I think it's important to note that it's an issue of policy. It's not a medical issue, and that's why, Roger, you quite properly pointed out there were no lawyers on this committee, and I think that's unfortunate in that you have a policy issue. The issue is, where do you set the bar? You have 2 to 3% of all accident victims are currently within this definition of catastrophically impaired, and that's a stat I got from the IBC. Where do you want to set the bar to exclude this most vulnerable group of people who suffer injuries in auto accident? How many seriously injured people do you want to exclude from the expanded benefits that are associated with the definition, with catastrophic impairment rating? Particularly given the fact that the non-catastrophic limit has been dramatically reduced from $100,000 to $50,000, including your assessment costs. We don't have time today to talk about what this shift will do to the tort system for these people who would have received treatment, who perhaps may have gone on to have a better recovery, may have gone on to return to employment, and without proper treatment, their outcomes are less certain. And I want to remind everybody that the catastrophic definition does nothing other than notionally entitle someone to benefits. It doesn't mean that because you've been deemed catastrophic, you're suddenly going to receive these large sums of money. You still have to prove that the benefits are reasonable and necessary every step along the way. And I'm sure every one of the lawyers on this panel has clients who have been deemed catastrophically impaired but have gone on to have a great recovery. And those people are not receiving these large sums of money. They're not costing the insurers anything despite their catastrophic impairment. The question is there a financial reason to change the definition? And everybody agrees that we need to have a healthy and strong insurance industry. Insurance premiums have to be affordable for members of the working public in Ontario. But OTLA, the Ontario Travelers Association, has hired an actuary to try to understand this problem and try to get to the root of the problem. And the information that we've received is that, yes, from 2005 to 2009, the number of accident benefit claims only increased by 19%, but the cost of those claims per vehicle increased by 95%. AB payments are way up, but they're way up on claims in the $10,000 to $100,000 range. the large claim costs are not correspondingly increasing in the same way, and in fact, the payouts on large claims are way down. Attendant care was a significant driver, as were things like housekeeping and homemaking, caregiver expenses, but presumably most of these problems have been rectified by the new rules that came into effect in September of 2010. And we're only just now starting to see the effects of those September 2010 changes, because a lot of people were still within the transitional provisions. So the cost savings associated with those changes are just now starting to trickle through. When you get to costs associated specifically with catastrophic impairment claims, the reality is that data simply doesn't exist. I, on behalf of the Trial Lawyers Association, wrote to FSCO asking for this data. If there's a problem that needs fixing, please show us the data. And they told us that they didn't track data on the cost of catastrophic impairment claims and that we should go to the IBC. And likewise, the IBC says we don't have any data on it either. The only data that we do have appears to show that large losses are shrinking. Our position with respect to the Ontario Trial Lawyers Association is that it's reasonable to wait some number of months now to evaluate the full impact of the September 2010 changes before contemplating any further changes to the definition.
If changes, and I say if, changes such as are outlined in this report were implemented, one of the questions that we've received that I'd like to answer now is, would the number of people who are catastrophically impaired stay the same, increase, or decline?
Well, I think this definition is, if adopted in whole or in part, would lead to a substantial narrowing of the definition. You'd see far fewer people deemed catastrophically impaired.
Jim, you agree with that?
I would agree with Dale. There's a dramatic decline. They've done nothing to expand any of the definitions to provide greater access. Every single one of them further restricts it, and eliminating the GCS is one example of that, so I agree.
I guess the question is there a financial need for these changes? And the data that we've seen shows that year-to-date third quarter results for 2010 point that to insurers reporting a $1.9 billion profit. That's all lines of insurance, but you have to keep in mind that Ontario Auto accounts for about 25% of all casualty insurance in Canada. And compared to the previous year, 2009, over that same period, there was a $1.4 billion profit. So there's a 35% increase in profits already reported, and that's before any of the September 2010 changes have had a chance to take hold. And we also have one last point is rate filings and rate approvals just came out, Roger, and what we've seen is an average of a rate increase of 1.78% that's been approved for all insurers across Ontario on auto. And that's a substantial leveling of the premium increases that we've seen, which is indicia of the good health of Ontario Auto at this point. The rate approval process is a bit of a mystery to most of us, but I think you can take it to mean that with premium increases either leveling off completely or declining, you can see that there is good health in the auto insurance industry.
This change in the catastrophic impairment definition could be huge for our clients and for the work that you're trying to do to help people. For the non-cat people with limits so significantly reduced, not to 50, but probably to more like 20, 25 after the assessment costs, and with so many people ending up in the MIG, which we're going to get to in a minute, to see the catastrophic impairment definition narrowing instead of broadening may be a concern to you, as it is a great concern to us. And let's turn to some of the specific issues, and for this I do want to draw on the experience of the accident benefits specialists who are here with us this morning. I'm going to start with the HCI system, because we're told by the accident benefits specialists that you are having, some of you, a tough time with it. We know it's an important system. We know that fraud is rampant and that HCI is one of the key strategies for trying to deal with a problem that is impacting the system very heavily. But Bill Kirwin, I want to ask you to start this question off for us. How does the HCI system work? Just very briefly, in case anyone out there is unaware. And what sort of problems are we seeing out there with HCI?
Thanks, Roger. HCI, for those that are unfamiliar with this system, which stands for Health Claims for Auto Insurance, is an electronic system for the transmission of health claim forms within the auto insurance industry, specifically with respect to treatment and assessment plans, in standard invoicing, as well as treatment confirmation forms, or OCF 23s, for the minor injury guideline. The reason that the HCI system was implemented was to increase the efficiency of the exchange of documentation within the auto insurance claim form system. What we're seeing in terms of problems with this system is that we're getting an increase in delay, primarily while healthcare service providers are getting set up with the system, registered with the system, and acclimatized with the system. So we're seeing a substantial delay in applications getting submitted while healthcare providers and facilities are getting acclimatized with the system. Many healthcare providers may only see a couple or treat a few patients regularly, so they may not see the need, or may not be making the preparations to get set up on the HCI system. Certain specialists, such as family physicians, who may not be called upon to submit applications frequently, are having difficulties accessing the system and getting applications in. So we're seeing a lag and delay from time to time, and on occasions with treatment plans going into the insurance company. Because the system is sort of up and running, and we're trying to all get acclimatized with it, there seems to be an increase in delay in response times to treatment plans getting approved, as well as responding to invoices. As a law firm, some of the issues that we're seeing regularly is because it's an electronic system that is set up, in certain occasions we're not getting copied with treatment plans or invoices that are being submitted into the insurance company. So we're in positions where we're unable or delay in help providing advocacy for our clients, for the healthcare providers, because we're unaware that the applications are going in. From time to time, insurance companies are not copying or providing a written approval or denial to the insureds, and we're not being copied with that. So again, we're sometimes often unaware that the treatment plans are not being approved.
I think that, we've got this bulletin that was put out by Fisco. It's A-01/11, which is really the document that, if you want to look at one document that talks about HCI, this is the one. And it indicates that after February the 1st, 2011, insurers have absolutely no legal obligation to respond at all to treatment plans that are faxed to them or mailed to them in the normal course and the way things have been done for the last 20 years. OCF 18s, 23s, and most 21s can simply be ignored if they're faxed in. So what we've been doing to attempt to deal with this problem is have our accident benefit specialists work with our treatment providers, and for the normal treatment providers, the occupational therapists and the physiotherapists that do the predominant amount of their work in auto, there's no issue or problem. They're registered and they're signed up. But with your family doctors or a psychologist who's in a treating role who may only see a few people that fall within the auto system, I understand, and I've never done it, but I understand signing up and registering on HCI is not that complicated a process, and so we'll have our accident benefit specialists work with these people to make sure that they get their registration in so that their treatment plans are responded to and that the insurers do have a legal obligation to treat these people fairly. And not to be critical of the adjusters, most of them are doing as they're supposed to be doing and responding appropriately. When it comes to the issue that Bill raised with the law firms essentially being left out of the loop because things are simply going to HCI, that is a problem some of the times, and I think that the key to that is communication. Speak to your treatment team, let them know the importance of the law firm being copied with the treatment plan so that you can track the time for response. If you're not getting a response, the law firm knows the treatment plan was submitted and can follow up with the insurance adjuster to make sure that that things are responded to in a timely way.
We've received a number of questions this morning about a topic that we plan to deal with because it's come up frequently in both firms, and it has to do with the $200 fee for the completion of treatment plans and the $2,000 cap on the cost of assessment reports. And I'm going to ask Kim to deal with this. First of all, Kim, are some insurance companies taking the position that assessments, not treatment plans, but full assessment reports have a cap of $200 on them? And second, this question's come in, does the treatment plan have to be approved for the person who filled it out, included an invoice for $200 to get paid?
Okay, so for the first question, we are seeing insurers misinterpreting the legislation and indicating that the cost for actually completing assessment is the $200 rather than the $2,000 cap under Section 25 of the Statutory Acts and Benefits Schedule. We've seen this with insurers such as State Farm, the Personal and Certis, and Economical seem to be taking this position. The $200 cost, which is under the professional service guidelines for preparation of the treatment and assessment plan, should be paid regardless of if the treatment plan had been approved or not. There's no pre-approval for the cost of completing a treatment and assessment plan, so that shouldn't be an issue. If you submit a treatment plan and it gets denied, that $200 cost should still be covered. This is a big problem because if the insurance company is taking the position, you know, $200 for a physio or psychological assessment is what's to be approved, no one can do an assessment in that cost. So what our law firm typically does is we send a letter to the insurance company just clarifying the legislation and just indicating that there's been a misinterpretation. This is the way that it was intended to come across. Even a call to the adjuster sometimes might be of assistance as well. You know, I think that by us sending the letter, it provides some information that the adjusters may not have, and it's been helpful in some circumstances that we've come across.
Josie, are we experiencing that same problem at Oatley Vigmond where some insurers are misinterpreting the SAVs?
We have, Roger, not extensively, but certainly there seems to be some confusion with respect to the professional services guideline, which provides the $200 limit for the preparation of a treatment plan, or perhaps a consultation a psychologist may need to have in order to be able to prepare the plan. So I think, as Kim stated, just a letter providing to the insurer, explaining the intent of the section and helping them to understand that the $200 is specifically just for the completion of the form and any consultation required to do so.
Just to comment briefly, firstly, on the $200 and issue and the insurers that are taking the position that that includes an assessment. I mean, if you thought it through and if they want to be fair about it, I mean, who can possibly do an assessment for $200? So hopefully, for those insurers that are taking that position, reason will prevail, if I can say that, and we won't encounter that as much as we are. With respect to the $2,000 assessment fee, or up to $2,000, some assessments can quite reasonably be done within the $2,000. Some cannot. For example, often an occupational therapy assessment can be done within the $2,000, and if what used to be done, say by an OT, might cost $2,500, and now they're subject to the $2,000 limit, maybe with that $2,500 assessment they might have been doing including several issues in that more comprehensive assessment, the tenant care and housekeeping and maybe some cognitive issues. Now, maybe what used to be one assessment can be broken down into 2 or 3 so that each assessment is kept under the $2,000 cap. A lot of our clients require neuropsych assessments, and no full-on neuropsych assessment can be done for anywhere near $2,000, and they're usually closer to $4,500. We just, if we want a neuropsych assessment on our case, we'll just, without even thinking or asking about it, we will agree to pay the full cost of the psychological assessment. If $2,000 of it can be paid by way of accident benefits, great. But if it can't, that's not an issue. So, and I know, Roger, your firm is the same. If we want an assessment done, regardless of the cost, we will make sure it gets done, and we'll either top it up or pay the full amount.
Rajni, can I ask you about another matter that is a great concern to the law firms, and I'm sure it's a great concern to the healthcare providers, and that's the tremendous delays we're experiencing in getting mediation dates from FSCO. Many people say the system is just plain broken when you have to wait for 9 months for a mediation that everybody knows is likely to fail anyway. Rajni, can you comment on that, please?
Definitely, Roger. There's currently an average of an 8 to 10 month delay in receiving a date for a mediation from the date the application is submitted to FSCO. The problem is that by the time the mediation occurs, in certain circumstances, the client may no longer require the services such as physiotherapy, massage therapy, and permanent damage may be done. And another problem is that the healthcare providers are left to manage the clients during the process. The solutions for this, I know that what our firm is starting to do is send an application directly to the insurer as well, along with sending it to FSCO. Normally, I know that FSCO doesn't send the application out to the adjuster or the person assigned to handle the mediation up until a mediator is assigned to the file. So we're talking about 7 to 8 months after an application is submitted. So by submitting an application directly to the insurer, this makes the adjuster or the person assigned aware of the issues, and what we tend to do is give them a call, give the adjuster a call, and confirm they've received the application, and that may actually, that brings the issues to the insurer's attention, and we may be able to resolve the issues before they even go to mediation. Another solution is fast-tracking the mediation. This is done by sending a letter to FSCO along with your application for mediation and providing reasons why the mediation needs to be conducted sooner rather than later. And an example when this may be done is when the client may be suffering from some financial strain, or there's some seriously deteriorating health issues. And lastly, just filing the application as soon as possible to FSCO. And I think this is one of those issues we can't really do much other than file the application as soon as possible and make sure the adjuster is aware of the issues and try to resolve them outside of the mediation process.
The risk of jumping around, going back to the last comment, last issue we were touching about was insurers refusing to pay the $200 treatment plan fee if the treatment plan's refused. This question is coming up on my screen over and over and over again. So this must be a rampant problem in the system, and I know FSCO is listening. Perhaps it's time to issue a bulletin, if there isn't one out there already, to try and get this fixed as quickly as possible. Let me turn to another item. There is now under the new SABs as of last September, a discretion in the adjuster to deny a treatment plan without having an assessment or a report. Josie, can I turn to you and ask you to just flesh that out a little bit for everybody, and to tell everyone what you're seeing out there as far as this change is concerned?
Sure, Roger. Well, what we have been seeing is that I guess we expected that we would see much more discretion from the insurer, but we haven't really been seeing that. I think the intent of the discretion provided was just to eliminate the multiple treatment plans and assessment plans for the same issue, which in the past was required mandatory insurance examination or disability certificate. In one instance, though, I did see the discretion of the adjuster with respect to an electronic device for a brain-injured client, and in terms of a solution is picking up the telephone and having a discussion with the treatment provider who did the treatment plan in the first place and the adjuster to help give more clarification. That might just bring back to HCI for one moment, because on HCI, the treatment and assessment plans have to be sent in either electronically or through paper, however you've registered. But the provider is unable to send electronically any additional information. So going back to my other example, if the treatment provider wanted to prepare a brief letter explaining why that electronic device was important, it needs to be presented to the insurer by fax under separate cover. Otherwise, it's not expected to be received. So those kinds of additional explanations might help us be able to get some of these things approved for our clients.
We want this system to work fair for everybody involved, and particularly in our clients that we're acting on behalf of. And I think that the key to this is communication. Communication has to be with the healthcare providers, with legal representation, with the clients, as well as with the insurance companies, to ensure that the insurance adjusters are presented with reasonable information to make informed decisions, especially now that we're moving into this electronic system where applications are being sent in.
I want to ask Kim to comment on that. I think we up here start with the assumption that insurance adjusters are trying to be fair and trying to make the system work too. At McLeish Orlando, Kim, what are you doing as far as the whole area of communications concerned?
Well, I agree with what Josie and Bill had said in terms of communication. It's extremely important, and I think even prior to submitting a treatment and assessment plan, putting that phone call in, to the law firm to let them know this treatment plan's going in, if it's going to be something extraordinary, or calling the adjuster and just giving them the heads up makes a huge difference. I think a lot of the times we see denials because the adjusters are caught off guard by maybe increased rehab support services or additional services that they don't expect, or they don't have enough clinical notes and records or medical support, which we tend to provide on an ongoing basis to the insurer. But I think that just having that call even before a treatment plan goes in or a request for an assessment makes a huge difference. Doing that before rather than after the fact, it already gets denied.
From the outset, I know both our firms. I mean, we order hospital records and family doctors' records going back quite a number of years pre-accident. So more often than not, adjusters they do want to be fair, and they're just looking for information. So if they want hospital records, if they want family doctors' records, if they want some details of pre-accident history, those are all very reasonable requests, and we're happy to provide that paper.
I want to turn to another issue that is done it again here, is a huge one that we're all wrestling with, and that is the new requirement with respect to incurred expenses as it relates to several of the benefits. I'm going to ask Bill to tell us what we're experiencing as far as the insurer's interpretation of this provision is concerned. And then I'm going to ask John to comment on what McLeish Orlando is doing about it. Start with you, Bill, please.
Thanks, Roger. As Roger stated, this is a very important issue that we're dealing with. It's a concern of ours as well, advocating for our clients' interests. For those that are unaware of what an incurred expense is, there's some provisions, the defining of incurred expenses. This relates primarily to attendant care benefits, housekeeping and home maintenance, and well as caregiving benefits. For an expense to be incurred, the insured person has to have received the goods and services. As well, the insured has to have paid for the goods and service, promised to pay for the goods and services, or is legally obligated to. And the person providing the goods and services must have done so in the regular course of their profession or occupation, or if they are not in their profession or occupation, for example, if it's a friend or family member providing the service, then they have to show that they have sustained an economic loss as a result of providing the goods and services. This is where we're running into a significant amount of problems because the insurance companies are taking a very strict approach to what is defined as incurred expenses and requesting proof of this economic loss. While there's really no substantive definition in the statutory acts of benefits of what actual economic loss, we're finding in a lot of cases, other than showing confirmation that there's lost time from work in terms of substantiating economic losses. Another issue that we're finding is that insurance companies are applying the incurred expense definition to accidents that occurred before September 1st, 2010. There's a FISCO bulletin out there with regards to transitional rules that is now defined that the incurred expense definition only applies to motor vehicle accidents that happen as of September 1st, 2010 and onwards. So we're seeing a lot of communication with the insurance companies, referring them to reference the bulletin in terms of the transition issues as well. Another issue that we're seeing on occasion is some insurance companies are providing remuneration at a dollar-to-dollar basis. So, for example, for every dollar of economic loss that a service provider has obtained, they're only providing the dollar amount in terms of remuneration. We're taking the position that this is really non-compliance with the schedule because, for example, paying attendant care benefits, benefits are payable in accordance with the Assessment of Attendant Care Form 1. It clearly outlines the hourly rates payable for services. So we're taking a position that for those insurance companies that are maybe paying on a dollar-to-dollar basis for remuneration, that it's not really complying with the schedule.
Big issue on incurred expenses is what is an economic loss. And when you step back and think about it for a second, say you've got a severely brain injured child at home, and before the accident occurred, you've got a stay-at-home mom who is the absolute best person to provide attendant care to that child. It's the mother. But under this legislation, unless that mother sustains an economic loss, she cannot get paid for, say, for example, attendant care. And as Bill says, some insurers are taking a position that what they'll pay, say, for attendant care will just match any economic loss that has been sustained. And to give you a dramatic example of that, Dale had a case of a quadriplegic girl. Her mother was working. She was making about $1,500 a month. She quit her job to take care of her daughter, and the insurance company just wanted to pay $1,500 a month in attendant care rather than $6,000. Well, that position was ludicrous in the circumstances. So we were just sort of gearing up to take all the legal steps, and then what we did do was make some telephone calls to some people higher up in authority in the company and say, look, this is just ridiculous, and you get some horrible press on this if this lasts. And then they did end up paying. $6,000 a month in that case, even though the actual incurred loss or incurred expense was, sorry, the economic loss was $1,500 a month. So the question then is, does it have to match? We hope not, and we just hope that, for example, if someone forgoes a job to stay at home and provide a tenant care, that might consider an economic loss, or it might even be something as minor as that mother saying, well, I used to do my own housework, I can't do it anymore, I'm going to get someone in to do it, I'm going to pay $75 or $85 a week to get it done so I can take care of my daughter full time, and hopefully that might, in that circumstance, generate the necessary economic loss so that the $6,000 in that example can be paid. So there's any number of things. I guess the key that we need to find out right now is whether the economic loss has to match what is paid for tenant care or caregiver or housekeeping benefits.
It's about the minor injury guidelines. As this questioner puts it, sitting with medical reports that indicates that your client has some pretty significant problems. I've got one client, for example, who a neurologist thinks has a significant head injury, but the adjuster has taken it upon himself or herself to use the adjuster's discretion to put this person into the MIG. So the question that has been sent in is the question that many of you will have. Can an adjuster do that? What are the consequences of being in the MIG? How do you get somebody out if they, in your view, don't fit within the definition of a minor injury? Just exactly what sort of position is that client in? Josie?
Well, as we know with the MIG, it's basically not limited to a sprain, a strain, a whiplash, associated disorder, contusion, abrasion, laceration or subluxation, and any clinical associated sequelae. It doesn't include a brain injury, as Roger indicated his client has. It also must be a predominantly minor injury. It also doesn't include chronic pain. And so the other issue with respect to the MIG, which is very important, is for us to be, as advocates, is to review records, because if the patient has a precondition as well, it indicates that they require compelling evidence from the healthcare practitioner that the pre-existing medical condition will prevent the individual from achieving maximal recovery. And we all know that the MIG is $3,500 maximum for medical and rehabilitation, which doesn't provide for much. Going back to what everyone has said today, I just wanted to echo the absolute importance of communication. It's critical. At the onset, the first contact physician, chiropractor, physiotherapist who is seeing the patient, filling out this paperwork and providing it to the insurance companies to be clear, and if they're not clear, to request records, family doctor, hospital files, to determine really what's going on and not put this person in the MIG incorrectly. I'd also like to just add one thing. Recently there was a situation where a client was put into the MIG, and after further investigation it was determined there was a fracture. And the communication with the adjuster and providing them with the radiology report was able to get them out of the MIG because the fracture is not included in the definition.
Here's a question from someone who tells us that the Alliance of Community Medical and Rehabilitation Providers is reporting from its 82 member firms representing over 3,500 practitioners an increase of over 150% in decline rates on initial assessments and treatment plans in non-MIG cases. That's huge, obviously, and the question is, are we seeing denials in treatment plans to the same degree as this group is reporting?
I would have to agree.
You too, Bill?
Yeah, we're seeing a substantial increase in the number of applications that are getting denied.
Definitely.
I definitely agree. I just think it's a lot easier now for the insurers to deny, and that's probably why that's occurring.
So we got some problems out there. I think we all want the system to work. We all recognize the insurers are our best friends, and the insurance companies have a right to a profit, and they have to earn one. It's a tough day for them. So thank you very much. There are many wonderful questions here. If we didn't answer them during the webinar, we're going to answer them for you by email. We have your email address. Please keep sending them in, and we sincerely hope on behalf of all of us that we've been of some help to you. Thank you.